Good morning, grade 10s. Today we're going to look at the next adjustment in line, namely trading stock deficit. Now, according to the perpetual inventory system, that is the type of system that we do since grade 9, it says that the business continually needs to keep a record of items that moved in and out of the business, especially now stock. Now, this is recorded in the trading stock account. And the trading stock account, therefore, always needs to show the value of the stock on hand, which is the balance. Now, in order to check this balance, if we look now at this balance of 15,850, in order to check that, we need to do a physical stock count. And this stock count is performed at the end of the financial year to ensure that the trading stock account reflects the correct value of stock on hand. Now, when the physical stock count is then less than the balance, then obviously there is a shortage, which we're going to call the trading stock deficit, and that will obviously be a loss to the business. Sometimes the physical stock count is more than the balance, then there must maybe a mistake in the books or something, and that is then obviously a surplus. Now, if we look at the example, the same that you have in your notes, you will see that we have a trading stock balance of 15,850. And when we did the physical stock count, it counted to 15,650. That means that there is a shortage of 200 Rand. So it's either stolen or something happened. So the trading stock to the value of 200 Rand is lost. So that obviously is now going to decrease our trading stock, and therefore we're going to credit it here, and we're going to create an account called trading stock deficit, which we're going to debit. That is then the same way as an expense. So we're going to credit this one to transfer it to the profit and loss. So in the profit and loss, we're going to have now a new expense or loss on the debit side, namely trading stock deficit for 200 Rand. If you look at the general journal, you will see that you're going to debit trading stock deficit, the expense or the loss, and credit trading stock because we need to decrease that asset. And therefore, if we do the closing transfer, we're going to debit our profit and loss, and we're going to credit the trading stock deficit account. In our trading stock account, I beg your pardon, in the post-closing trial balance, we will only have trading stock, which is the new balance, which is most of the time the same as the physical stock count. And that is then trading stock deficit.